This is the S&P 500 ETF SPY one-day reading for January 2nd, 2024. It's currently October 31st, 2023, 11:36 a.m. Eastern Time. SPY at the time of this reading is currently $415.95. That's USD. The shuffle file that we're about to play for you for the January 2nd reading was created on October 25th, 2023 at 8:29 p.m. Eastern Time. That's this video here in the corner. The overall theme and behavior for SPY in the second is it's significantly to the downside, guys. There's a brief peak that's easily missed, followed by a decline through multiple support levels. There's also some cross-reading correlations going on here. We have the debak card, which is very similar energy to the indolence card here on the second. And then we also have the debak card here as the low for the month of January. There's low significators. There's a lot of cross-reading congruencies in here as well. Even when we think about this stone here, appears here. So a lot of cross-reading congruencies, not just with the cards, but also the anchors. I would say we most likely have a lowest low for the month of January and possibly our first lowest low for the year here on the 2nd of January, the first trading day of the year. Behavior around the highest high, we have a key resistance level that's highlighted near the high. It's a lot of price change involved in that resistance level. There's usually a lot of volatility into and out of that, though it's also within close time proximity to a lowest low for the day. And that lowest low is going to be, you can see the low today is a key technical price level that will be relevant or is relevant, 1 month chart at least, probably on a year-to-date chart based on it being like near the low. And we have the science card here, which is also a cross-reading congruency. So this is a very important price level on not just a 1 day, but also a 1 month, and probably here on a 1 year as well. We're advised to trade around a notable breakout. On a 1 day chart, there'll be a breakout. We're advised to trade around that. Before we get into the remainder of the reading, I just want to make sure everybody's aware the whole purpose of the channel is to follow the rule of karma, which is a threefold rule, an unwritten agreement between the universe and those using this information for profit. You must follow this rule. If you plan to continue profiting, the universe will shut you off if you fail to follow through on this, guys. So what you want to do is you want to take 5% of the profits from each profitable trade. It should be every time you profit, because we continue to do what we do now, we continue to do. So if we put it off now with the intent to do it later, we're going to continue to put it off now with the intent to do it later. The universe will shut those people off. I'm telling you, don't be one of those people, guys. It doesn't come back on. Make sure to send 5% of the profits forward to one of these charities, effectively transmuting the competitive energy of the stock market into goodwill, which is the whole purpose of the channel. It also guarantees abundance mentality in your own mind, and then 5% of the profit should be donated back to the channel here through one of these links, guaranteeing gratitude mentality and saying thank you. Leaves you at 90%, my friends, more than enough, especially when you realize just how accurate we are. So make sure to spend that 90% out of love, keeping your conscience clear. Following those rules, you follow the rule of karma for the channel, the universe is going to set it back to you tenfold through this channel, my friends. Remember, neglect to follow that rule, the universe will shut you off. Very difficult to get it back on, my friends. So we have a decline, or probably a gap down and a decline here early in the pre-market. There's a lot of price change, right around the open. There's a brief peak that's easily missed. So we probably rally into a resistance here around the open, and then there's a brief peak that's easily missed, followed by a decline to multiple support levels. That decline probably continues all the way into into 10 o'clock, maybe even as late as 11 o'clock, hard to say, but somewhere around 10 to 11, that decline continues into that time. There's a trough there around somewhere between 10 and 11, maybe closer to 10, but somewhere around 10 to 11. And then we should have a notable move to the upside, like a pop to take us to a day's high, followed by a drop, and then some sideways rotation between 11 and 12. Possibly another high for the day here midday, because the abundance card often notates like a new high. It doesn't always. What it does always do is it notates a move higher through resistance. We stay above it briefly, and we break back down through that same price level shortly thereafter, and it will be like a new local high. So it's probably going to be a new high for the day here. There's a sharp drop to between 1 and 2. There's a sharp drop through multiple supports. We'll probably come to like another low for the day there, and then the decline should continue with a little bit of like sidewaysy behavior going on into like the last 2 hours, but the decline should continue into like roughly the last hour, where that sideways rotation will end with a fast sudden move higher right around the close. Sideways fluctuating rally that precedes a decline taking place in the post market, and the sneak preview for the following day, rally increasing with a rally along a diagonal trend line, breaking through horizontal resistance on the 1 day chart to meet the second resistance, then pulling back to somewhere between those two price levels. No real congruency going on there, but my sense is that we likely open higher and then decline further. So my trade for the first is going to be, if I can catch, this is a pretty tricky day, guys, because it's a brief peak that's easily missed. But what I would look to do is position myself in both directions around the high. So if there's a high somewhere here in like the first half hour, it could be right at the open and then again between 10 and 11, hard to say, but I think it's probably right at the open, and then there's a pop and drop there between like 10 and 11. In the midst of that high, if I could open up a short position, I would do so for a day trade to close towards the end of the day before a big move higher. The following day we open higher, so I definitely want to get out for a day trade, or have an expiration that's out further than like maybe out past the 5th with the intention of getting out of the short position here on the 3rd. And that's how I would start the year, guys. Remember, we've got this Ace of Swords card appearing here again, so this price level will be revisited or highlighted here on the 3rd, and we'll get into that in the reading for the 3rd. But that's the S&P 500 SPY ETF for the 2nd of January. My friends, do not forget to follow that rule of karma. It's super important. Blessings. I'll see you angel investors on the next one.